Very few investors understand this, but an event is about to happen that has historically always pumped the price of Bitcoin. In fact, it has pumped the price of Bitcoin 100% of the time that this event occurred. As an investor, I really like those odds. This can be the event that will send Bitcoin to 100k, 150k, or even 200k plus. In this video, I'm going to reveal what this event is and how smart investors can prepare for what is about to come next. And if you want me to make more videos like this, then be sure to like this video and subscribe to my channel for more. Now, let's get started. All assets move in cycles. Literally all assets. Stocks, crypto, real estate, even watches. And there is a very well-known cheat sheet circulating on the internet, which explains very well how these market cycles work. This cheat sheet is called the Wall Street cheat sheet. And you can find it by simply typing Wall Street cheat sheet on Google, and then you'll pull up an image that looks very similar to this. So over here on my screen, you see the Wall Street cheat sheet. It shows the anatomy of a typical market cycle. During a market cycle, the prices of an asset move from undervalued to overvalued and back to undervalued. So let's start at the bottom of a market cycle. So there we have a phase called disbelief. People basically don't really believe that an asset still has the potential to go up in value. And when the market starts to go up a little bit, they're not really believing it. So very few people are actually buying into the asset because they've had probably a bad experience losing money with that asset in the past. But then a few smart investors start to load up on the asset and the price starts to increase. And suddenly we see a little bit of a pump in the market. And then we enter the hope phase. During the hope phase, a small group of people that is still monitoring the asset is seeing that the prices are slowly going up, and they start to become more hopeful and they start to buy back into the asset, which pumps up the price even further. Which brings us to the phase of optimism. During the optimism phase, that's where all of the big YouTubers, the TikTok influencers, everyone around you is talking about this particular asset. Maybe it's crypto, maybe it's stocks, maybe it's real estate. But because the prices of this asset have been going up so much over the past time, people are starting to get FOMO, fear of missing out. If you've ever experienced this sensation where you believe that everyone around you is making money with a particular investment and you're missing out, but chances are that you've probably took some of your money and threw it at that investment hoping that you would get rich quick overnight. This idea of FOMO, fear of missing out, that is what drives the next phase of the market cycle, because that's when we go from optimism to belief. Everyone is slowly becoming super greedy. They believe that the only way for this asset is to go up in price. So we go from belief to thrill. That's when people start to become super greedy. They start to take all of their savings, sell their cars, sell their homes, put it all in this asset class. This is when your mom, your neighbor, your hairdresser all start to talk about this particular asset class. I don't care if it's Bitcoin, Ethereum, if it's real estate, a particular stock, maybe it's Tesla, maybe it's Nvidia. And then we reach the euphoria phase. Euphoria is when the prices of this asset are completely disconnected with the underlying fundamentals. And it's so overvalued that at one point it needs to correct down, because smart investors understand that the best time to sell is when everyone else is buying and pouring all of their life savings in the market, because smart investors got into the market in the disbelief and hope phase. So you've got this very well-known quote from Warren Buffett, and that is, be fearful when others are greedy and be greedy when others are fearful. The masses are buying when everyone else is buying. They're basically sheep. They don't think for themselves. They're just acting based on their emotion of greed. Whereas the smart investors have decoupled their investing decisions from their emotions. So when everyone else is buying, they are selling, and they're holding the big bags, the tens of millions, the hundreds of millions, the billions of dollars. So when they sell, the market moves. And then the market starts to dump a little bit. But we see a little bit of a rally coming back because, the masses think that, this is just a little temporary cool off and the market will go up after this again. But in reality, that never really happens, because after the complacency phase, where we see a little bit of hopium enter back into the market dumps further again. And people start to become fearful, like, what if this time the market doesn't go up again? So they start to freak out because they've put all of their life savings into this particular investment, and they start to panic sell. They pull their investments out of the market with a loss, hoping in this way they can try to avoid their, minimize their losses and make sure that their investment doesn't go to zero. Some people keep their investments still in the market, they cash out, but they're in denial. They believe that their investment at some point will go back up. The market just needs a little bit of time to process this and then we'll shoot to new all-time highs. But that doesn't work. And the masses start to panic. It's like, oh, I've been scammed. I thought that this investment would go to the moon, but in fact, it's starting to look more like this investment is going to go to zero. So they start to panic sell and pull even more money out of the market with a big loss. And then people start to become angry. They believe that they should never get back into this investment again. It's a Ponzi scheme, it's a scam. I should just focus on my business because investing, it doesn't work. No, investing works. I personally believe, this is my opinion, this is not financial advice, but I personally believe that investing isn't risky. The behavior of people is what makes it risky. If you don't understand that all assets move in these cycles and you just let your actions be guided by your emotions of greed and fear, because that is what this is all about. If you look very closely at this Wall Street cheat sheet, it's only about emotions, the emotions that are driving the actions of people in the markets. People go from extreme fear to extreme greed to extreme fear to extreme greed. And the key as an investor, if you want to succeed over the long term, is to understand these market cycles. Compared to all of the other asset classes out there, Bitcoin actually moves in very predictable cycles of 4 years. And why exactly is it 4 years and not 2 years, 3 years, 5 years, 8 years? That all has to do with the Bitcoin halving event that happens every 4 years. Let me explain what this means. The new supply of Bitcoin is generated by the Bitcoin miners. Those are individuals or companies that own specialized pieces of hardware that process transactions on the Bitcoin network. You can see them as the banking system of Bitcoin. All of the transactions that are happening on the Bitcoin network are bundled together in blocks of transactions. Every time a block of transactions is processed by these Bitcoin miners, new Bitcoin is rewarded to these Bitcoin miners. And this is what we call the block reward. Every 4 years, the block reward gets halved. For example, in 2009, when Bitcoin just got started, the block reward was 50 Bitcoins for every block of transactions that was processed by the Bitcoin miners. 4 years later, at the Bitcoin halving event, this block reward got halved to 25 Bitcoin. And 4 years later, this block reward got halved again to around 12.5 Bitcoin per block of transactions. 4 years later, you guessed it already, this block reward got halved again to 6.25 Bitcoin. And now in April of this year, the block reward will get halved to 1.25 Bitcoin per block of transactions. A little side note over here, there will never be more than 21 million Bitcoin. That's just one of the properties that the founder of Bitcoin, Satoshi Nakamoto, embedded in the Bitcoin protocol. And it will take more than 100 years for the final Bitcoin to be mined. Now let's talk about the effect that the Bitcoin halving event usually has on the price of Bitcoin. When the Bitcoin halving event happens, we usually see a supply shock in the market, which drives up the price of Bitcoin over time. Bloomberg has recently published their research on the effect of the Bitcoin halving on Bitcoin's price. Let's have a look. I'm going to pull up the chart on my screen right now. So over here, you see a chart which shows the average effect of the Bitcoin halving on Bitcoin's price. This chart is created based on the data from 2 previous Bitcoin halving events. This chart is dissected in multiple different phases. If you look at the vertical axis, we've got these red dotted lines. So the first red dotted line is 6 months prior to the Bitcoin halving event. Then the second red dotted line is the halving event. And then the third dotted line is 6 months following the halving event. And the fourth dotted line is 1 year following the Bitcoin halving event. Well, here on the vertical axis, we see the index level. So basically these researchers have taken the index 100 basis points at the moment of the Bitcoin halving event. So we see that right now we are around the orange dot. We are approaching the Bitcoin halving event. And this means that historically towards the Bitcoin halving event, so from 1 year until a few months before the Bitcoin halving event, we usually see the price of Bitcoin slowly go up over time. Why is this? Because the market basically taking into account that the production cost of a single Bitcoin will be higher after the Bitcoin halving event, because the new supply of Bitcoin generated by miners will get halved. If we stipulate this further, let's say 6 months after the Bitcoin halving, we see that again the prices of Bitcoin usually, based on the data of the previous past bull market cycles, usually went up again. But it's mainly between 6 months and 12 months after the Bitcoin halving event that the prices start to really skyrocket. Of course, this is no guarantee that this will happen again. The big assumption that we're making over here is that the Bitcoin cycle will repeat itself like the previous 2-3 cycles have played out. Of course, there is no guarantee that this will happen, but we're slowly seeing more and more evidences that this cycle will play out again, similar to the previous 2 Bitcoin cycles. Let's have a look at another interesting chart, which I usually pull up when I'm discussing the effect of the Bitcoin halving event on the price of Bitcoin. So here you've seen that from the bottom of the market cycle in 2011 until the next top, the price of Bitcoin has surged with around 11,645%. Then from the next bottom until the next top, Bitcoin has increased with around 7,382%. Then in the next market cycle, Bitcoin increased from around 1,991% from the top until the next, from the bottom until the next market top. So what can we observe from this chart? There's 2 important things that you can observe from this chart. Number 1, if you zoom out, or actually if you don't zoom out, you'll see that the price of Bitcoin on the short term can go up, it can go down, it can go up 5%, it can go down 10%, then it can go up again with 12%. On the short term, the prices are very volatile, okay? But if you zoom out and you look at the long-term trajectory of the market, you can see that the overall trend of the market is up. You see that there's almost a steady line from the lower left corner up till the lower right corner of the chart. Then the second thing that we can observe, as Bitcoin is maturing as an asset, we have diminishing returns every market cycle. So you see that the first market cycle we saw 11,645%. The second cycle we saw almost 7,300%. The third cycle we saw almost 2,000%. Probably the next market cycle we will see a little bit lower returns, but that is normal because the asset class is maturing and we're seeing more and more investors participate in the market. And as a result, this is what happens. But still, even if Bitcoin goes up only 800% or 1,000% from the market bottom, that is still huge. It is so much higher than many other traditional investments out there, like for example, ETFs, real estate. So yeah, these are the 2 charts that I want to show you, which show that historically, the Bitcoin halving events usually, well, historically, 100% of the time, always used to pump up the price of Bitcoin. I hope you enjoyed watching this video, and if you want to see more videos of me sharing my research and my insights of the market, then be sure to like this video and subscribe to my channel for more. And that being said, I will see you in the next one. Peace out.